Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Monday, June 6, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we come together to take a look at the market macro to micro, the structure of the market, drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you're interested in checking us out, I'll put up my contact information in just 1 second. Before I do that, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Contact information is quantumleapfutures@gmail.com. There's no website, there's no blogs, this is not a commercial venture. This is just a group of retail traders doing live trading and live analysis during the course of the day. You will need a Skype account, so send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And if you like what I do and you like this video, you can see probably close to 400 now, a couple of years at least, up on YouTube. Just do a search for Quantum Leap Futures at Gmail. Do a search on YouTube for Quantum Leap Futures. And if you like what I do and you're on Twitter, please follow me on Twitter at Crazy2. Okay, so Friday, our main hypothesis was a rotation down to find buyers somewhere between the 90 and a quarter and the LVN here at 86.75. They came down. The idea was to rotate back up through the middle of the body of the profile, chop around for most of the day, and then make a late day probe up into the 2100. It was a beautiful plan. I didn't trade it especially well. I didn't have a bad day, but I made most of my money before the open, so I wasn't really worried about trying to push the trade. But if you would have got long at 86.75 or above the 90 and a quarter, you could have stayed long all day and ran it all the way up into 21.04.25. I mean, the problem is sometimes you've got a great plan set up and you don't execute well because we're in a very tough trading environment with anytime we get near all-time highs, it's it's very sketchy. I mean, right now we're currently sitting basically less than 3 points, 3 points from an all-time high, plus we're right near the scene of the crime of the non-farm payroll. I mean, the question today is, do we make a new high or not? If we make a new high, is just how are we going to do it? Are we going to come down first and then rotate up, or are we going to go up and drop, or are we going to just create a trend day and just keep going? So that's what we need to determine. So let's start with the basics. Let's go back to our simple candlestick chart with our 20 SMA and a 9 EMA, starting at the monthly and working our way down. See where we are within the trend. You can see beautiful trend. We challenged it at the end of 15 and again at the beginning of 16, and we're now coming up and holding above the 9 and the 20, and we're starting to see a little teeny bit of separation. Not much, but we don't even get close to violating this trend on the longer time frame until we get all the way down to 2040. And I'm looking at that 20-40-50. That's the prior microcomposite in that balance area that we are in for quite some time. Going to the weekly, you can see weekly, good slope, good separation. Price is paralleling the 9 nicely. We do have a little bit of a technical gap. Move down to the 2071. I'm watching the 2069 and a quarter. It's one of my key lines in the sand below. But for the most part, this trend is very strong on the weekly. But remember, when we're at highs, things can change very quickly, so just don't get your bullish hat on too tight yet, especially with Yellen speaking today. Daily, you can see good slope, good separation. Price is riding the 9 nicely. We do have a naked cross on the daily all the way down at 2057.75. You know, just tells us that we have repair work to do down here, and it is on a daily time frame, so I'm not calling for 2057 today, but I'll be pretty sure at some point in time, especially if we get below that 2069 and 3/4, that we actually come down to this 2057, 2058 area. But the trend on the daily is up. Going to the intraday, we've been in this consolidation for the last week or so, in this balance zone again. Now we're starting to get some separation, a little bit of slope on the 9, but still basically consolidation. We've got this little zipper here, you know, that we're going to come up and challenge, and we need to see if we create another zipper and then get a continuation wave, or we fail with a failed breakout and a move back down. That's basically what I'm looking for today. We'll get into that in a little bit. Trend is still up though on the 4-hour. On the 1-hour, same thing. Good slope, good separation. We just came up. This is a good example of coming up and taking out a naked cross right here at the 2102 and a quarter. We took it out on this candle right here, then came back and had a little bit of a Mr. Sneaky, come back, tested the 9, and then we bounced off, and we're getting slope and separation, and we broke above that prior fractal high and coming up and challenge again. As you can see, this zipper area here, and we'll put a profile on that to see. I'm pretty sure it's 2104 and a quarter is the intraday VPOC for the zipper here. But the trend is up on the 1-hour, 30-minute, same thing. Got a little bit of a technical gap, a move back down to 2175. We'll close that technical gap as it stands right now, but slope and separation trend is up on the 30-minute. On the 15-minute, same thing. You know, strong trend. 5-minute. Okay, 5-minute, we're coming down and challenging right now. And we're losing some slope. We still have some separation. A move down to test the 20 will take us down to 2102 and a quarter. And we've basically failed off of the 2104 and a quarter, which I believe is where that VPOC is. So let's go take a look at that, and give me a chart I can do it on easily. Let's go to the flex level chart. Actually, no, let's go to a 2-tick Renko. No, let's go to the 4-tick Renko. Right here. No, it's a little lower than that, 2103 and a quarter. But we've been up there a couple times. I really should do this on a, let me just do it on a longer time frame. Let's go to a 60-minute. I have to go too far back. All right, let's not worry about it. 15-minute. We can use 2103.50. I don't have a problem with that. I thought it was 20. When I was doing my homework, I thought I saw it as 2104 and a quarter. All right, so we see that all the trends are still up. You can see now the interesting thing is we're above the value area now of this initial breakout with that 2096.75 as a key level. What's interesting is that the overall breakout right now, this 1, 2, 3, 4, 5, 6, 7 days, 8 if you count the holiday, the most traded price, or the microcomposite VPOC, is still way below us. So we've left value below, down at the 2087.50 area. The last 4 days, the value is shifted up to 2094.50. So if we can't hold the 96.75, I'd be looking for a move down to the 94.50. But I don't think that's going to hold. I think we're going to come all the way down to the 2087.75. If we break that 2096.75, we have to get below the VPOC from overnight, which is down here. Now it could shift because we put a fair amount of volume through here at that 2103 and a quarter. Is it 03 and a quarter? 03 and a quarter. But we've got the overnight VPOC here at 98.50, and then Friday's VPOC is down at 99. And then you can see that we've created that LVN just below the microcomposite value area high from the former microcomposite value area at 96.75. We've got an LVN of 96. But overall, we're in balance and we're holding above prior value. So as long as we hold up here, I'm still anticipating to put in a new high. I'm still anticipating to put a new high in regardless. It's just whether or not we pop it first and then fail and come down to find the buyers, or we fail and come down to find the buyers and then grind our way back up. It's hard to say. We've got a half hour to go, and we're only trading basically 3 points off of the all-time high. So I do anticipate that we will put in a new all-time high today. It's just I'm not sure which way we're going to do it. So let's start going through our levels and our overnight. It's going to be hard because we could put in a new overnight high, but remember, we had that high at 2104 and a quarter before. We have the naked close at 2103.50. Our range high from Friday at 2101 and a quarter. So we got lots going on in this area. Created an LVN here at 02 and a quarter. I'm going to use that as a trade level. Below it, I'm not too worried about the 01 and a quarter. I don't think that's the level we have to concern ourselves. If we get below the 02 and a quarter, then I think we make a move down into the value area high and the naked VPOC on Friday down here at 99. Our key level, first key level today is going to be the 2096. Call this our warning line for a larger rotation down. Oh, come on, Doug, can you just type? Okay. Okay, and then we have our all-time high. We've got the 2104 and a quarter. We just put that in. That's our overnight high. We could put in a new overnight high before the session starts, but that's going to be, next key level. If we break the 01 and 4, 2104 and a quarter, we've got the scene of the crime for non-farm at 2105. And then the all-time high at 06, and then the rule of 10 at 2110. Right now, based on our overnight low, which is down at 2094, our upside ATR target, our 20-day daily ATR is running at 2173. So 2094 plus the 2173 takes us up to 2115.75, which is just above that double measured move that we've got at 2114.75. You know, if we hold in the 2100s, we don't pull back. Maybe even if we came back and pulled back to the 96 and came right back into the 2100s, I am anticipating a move up in between 2110 and 2114.75 based on the reaction to Yellen's speech that she's putting out. So other information, we don't have a VPOC shift yet. So we've got to put in the overnight VPOC, which is also down in that 99 area, 98.50. And then there's really not much more information. Inventory is net positive for the overnight session. So it's neutral to net positive. So, you know, if we get down below the 94, then the longs are going to feel some pain, and we're likely to get that rotation down, and we'll talk about that. Let's just get this out of the way. All right, let's get our levels in. So all our levels are set. We don't have much to guide us on. I did want to check the zipper. 1 second here. That zipper is done. Let's check the 100% on this. See if it's hit. 100% is 2104.25, so we've already hit it, and there's no other zippers to measure from right now. So we don't have a lot to go on in terms of our upside targets. Once we get above the 2106, it's basically the rule of 10 at 2110, the 1475 double measured move, the ATR upside target. We have another measured move at 25, and then our unequalized all-time high at 2134, and then our weekly ATR is running at 55.24, so off of the bottom of the Globex so far at 2094. Our upside weekly ATR target is at 2149.25. I haven't put one in for the low yet, just because we keep coming in towards the high. But based on where we're at right now, if we have a 2104 overnight high and a quarter, take off the 2173 for the daily, that takes us down to, look at where it takes us to, 2082.52, right in front of our key line in the sand. Okay, and then the weekly, although I doubt this is gonna remain valid for long today, is down at 2049. So you can see, you gotta always think in the bigger picture. It's nothing for us to come down into the 2050s based on the weekly, and it doesn't violate the trend. People will be screaming that the top is in, and we're in a bear market, and all these funny things that the talking heads like to say, but in actuality, it would be a normal rotation to go back down into the 2040 area. So those are our we got to do our levels below here. So below the 96, I'm looking for the overnight low at 94, then 92. 89.50 value area low, and then a move down target 86.75, that range low, and then the daily downside ATR target, and the key line in the sand 82. Below that, the midpoint of the gap at 78.75. The naked close and range high from the gap at 75.50, 75.75, and then 73.25, 71, and then our next key support, which will be the 69.75. Below 69.75, then I'm looking for the move back down into the 50s and more likely probably into the 40s. And just to get an idea of what that looks like, let's just go back to the big picture again and bring in context. All right, so we're above the 86. We're outside of this Gaussian distribution. We're above the prior fractal high at the end last quarter of the 2015. We're trying to hold up here, back inside the value that we just broke out of. Okay, we've got the microcomposite VPOC and composite VPOC. So the most traded price going back to March 17th, and the most traded price going all the way back to the beginning of 2013 is at 2051. And that's why if we don't hold the 69 area, okay, I'm looking for that move, bigger move back down into the 50s and possibly back into the 40s. And then we go down into a smaller time frame and go back to that microcomposite VPOC right here at that 20, 40, 50. We've kind of got overlapping value now, okay, in this area, which I had to do in order to determine where the value area, the longer term value area would be for this breakout that we had, and then this breakout here. So we've got a bit of a weak high going right now. I don't anticipate it to hold. So hypotheses, how are we going to trade this? Right now, my main hypothesis is a rotation down, testing the value area and the overnight VPOC and Friday's naked VPOC with possible move down to 96, down all the way down to the 92 area, and then a grind all the way up and breaking the all-time high and a move towards that 2110 area, possibly even into the 2114, 2115 area. So the main hypothesis, hypo 1, is an open auction just inside of range or just outside of range. So an open auction in range or an open auction out of range, a move down towards the 98, 99, and then bouncing somewhere between 99 and 92, and then a rotation back up and a grind through and up into the 2110 to 2114. That's hypo 1. Hypo 2 is an open auction in range, possibly an open drive. Okay, take out the overnight high, the new adjusted all-time high at 2106, and then somewhere between 2106 and 2110, maybe even 14, failure and a rotation down through, fight the range high, and then a late day continuation push down towards the 89, 86, maybe even 82 area. So hypo 2 is open auction outer range, open or open drive, either or, as long as we hold above value, and then a push up, find responsive sellers somewhere up here, and then failure and a rotation down, fight the Friday range high, and then get a continuation wave down towards the 86, 82, possibly coming back into this gap zone at the 78, 79 area. Hypo 3 is a open auction in range, fight the range high, come down somewhere between 96 and 99, come up into the 2110 area, and then chop around there, waiting for Yellen to speak. And then with good news and Yellen, we pop up into the 2120s and we get a continuation trend day up towards that equalization. Depending on what she says, maybe even all the way up into the 2134. That's a low priority. That's why it's a hypo 3. And then my alternative hypo is we open auction in range, take out the overnight high, maybe even a false breakout above the all-time high around 21.6, come down, get a strong push down, come back inside and chop around inside the body, and then get a continuation wave down into the gap zone, down at 78, 79, possibly even 75. So those are my main hypo. Hypo 1, a move down and then grind up, chop around with a possible late day probe. Hypo 2, a pop and then drop, and then continuation late day probe down towards the 86. Hypo 3, open drive or move, small move down and a push up, chop around in the 2110, and then a move up into the 2114 to 2125, maybe 2134. And then hypo 4 is a false breakout, take out, maybe put in a new all-time high, fail, come down, chop around, and then get a strong continuation wave down into the gap zone and towards that 2075 50 area. So that's what I'm looking at. Taking a quick look at the Renko. We're currently in the upper channel. Move down to test the center line, takes down into that 99 area. Break below that takes us down into the 93, 94, probably even the 92 area by the time we get there. If we hold above and move up to the upper Keltner, we'll take out the new all-time high. So sets up pretty much with our levels. And then take a quick look at gold. Gold made the move back up into, oh, it's the wrong gold chart. Gold made the move back up on Friday on the news, the NFP back up towards the 1237. We're currently trading at the 1247, fighting the CLVN at 1250.50. We get above that, look for them to spike up to the 1258. This is going to depend on news. I'm really anticipating that we're going to slowly work our way back down to this 2037.60 area. This has been a pretty strong 42 and a quarter point rotation. I'm expecting a rotation back towards the 1237.60 area and continuation chop around this composite VPOC, which goes all the way back to 2008. So that's my hypos. That's our pre-market session. As always, we should look at the news first so that we know. We don't really have a lot of news. We have 10 o'clock. We got labor market conditions, but the big news is going to come at 12:30 when Yellen is speaking. Where is she speaking at? At the World Affairs Council in Philadelphia. So wait for her. I think we're going to move early, and then we'll probably grind and wait for her press conference or her luncheon speech. Anyway, I'm going to close this room down, and then I'll reopen so I can grab the recording. Trade well, trade safe. We'll catch you on the flip side.